Cool, great. So let's carry on. So here are two other little things to deal with. They're not actually quite major or anything, but they're quite important just to make sure if you see this, especially typically, I imagine in Section A or Section B, you are entitled. A company is entitled to carry back 12 months. Now, again, like we highlighted earlier on, a company might, in order to, for whatever reason, it might choose a short period of account to kind of realign for whatever reason, maybe with a parent company or just because it prefers a certain year end. So it might have at some point in its life a short accounting period of account. So if you like, imagine this is whatever, maybe this is October, November, December. So 30. Imagine a company's trying to get to it wants December to be its year end. So here we have the 1st of October, and then here what they do is then they do this sort of 3-month thing, October, November, December to the 31st of December, and then then they now go all the way. So now they're back at the 31st of December. That's what they really want. Imagine they make a loss in this year. The drama becomes, well, if I'm carrying back this loss, what can I do? Well, you're allowed 12 months. So 3 months, of course, here is there. The question here is what's going on here. So, well, if you've done 3 months here, you're allowed to use 9 months to offset 9 months, to offset against 9 months of the profits in this year. That's the issue here. So what we need to do is we need to work out what a 9-month profit situation you're allowed to, if you like, use whatever the 9-month profits are here, total profits, and then we can offset our losses against those. So it's still giving us, so just pretending as though the question we're just asking is, well, what are the profits for the last 12 months? Ultimately, it's just that we bite into the prior period. So we must time apportion what's going on over here. Right. So, but just for neatness, so you can understand what's really happening, I'm just going to walk through this question very quickly. So what we see here, just drawing it out again, is that we have this thing here where this business has gone from the 1st of April 2018 all the way to the 31st of March 2019. And here we have a 6-month sort of scenario. We have the 1st of October 2017 to the 31st of March 2018. And prior to that, we would have had a 30th of September. 30th of September, so that would have been a 1st of October 2016. So here we have this scenario where we have 20,000, 2,000, and qualifying charitable donations of 500. And here we have 13,000, 1,000, and qualifying charitable donations 1,000. I'll just give myself some more space. And I'll just change my pen color here. And what we have is a loss of 50,000. Well, I can't use it against any other income. There's nothing going on here. I can't make my loss any worse, so automatically that's wasted. That 1,000 qualifying charitable donation is as a deduction is gone. I can't do anything with it. So this 50,000, what I then now have to do is, what I can do if I'm going back 1 year, is I can use it against, of course, all of the things going on here. So that's 14,000. And of course, this is now wasted. So technically, really, I wouldn't even have that there. I just have that. It's in terms of QCDs. So that's gone. So it's really a case of adding this through. So add this and get 14,000, and then deduct this this tax carryback, this loss carryback that you can use against it. Now the question here is, and this is how many months? This is October 1st of, so 6 months. So I can utilize, basically imagine I just wanted 6 months of this. So I have to pretend this is a 6-month period. I basically apportion it. So 6 months of this here means that's 11. So that's 10, isn't it? And that's 1. So I can use losses up to 11,000 against this finance year FA, this 16. So what does that mean? Up to 11,000, because that's 6 months. I can use 6 months of this. So I can, from this 50,000, bring back 11,000 against this. So in effect, sorry, I don't know how to get it. Yeah, so in effect, I've used 14, I've used 11, and I can then carry forward. I have to carry forward the rest of 25,000. Remember, the total was 15. I've used 14 here, 11 here. I have 25 left, which I can carry forward. Now, what I now also have is I have 22 minus 11. So I have 22, so I have 11,000, and then I take off my QCDs, and that leaves me with 10,500 to be taxed in that period. So that's how that works, right? That's how that works. So let me just show you the well, I mean, you have the answers, but I'll just show you if it in a much neater fashion how that presents itself. Here we are. You know, it's just that again, like I say, I've not been as neat as I should be. So you have all that wasted. That's the 14. I've taken that out. Please label your work. So create your table. It's just, again, because I'm making a video, it just takes too long to type all this out. So you have that. That's the 14. That's the 11. As a result of apportioning those profits, 6 months of it. And then you have that. And these are unrelieved. So however you create an appendix to show that unrelief, the closer you'll make, the more time you're spending on making your work look neat, the better. But ultimately, you can now see that we have what we can carry forward. Cool, great. So let's move on to the very next one. And then, and almost, I think from here, there's only one more example before I have to take another break. So what we now have, we've done this one. Let's look on the next thing. So the issue is to do with what we can carry back, or the amount of time. So we can carry back against 12 months. Yes, in our year we might have a whatever. You might have, if you have losses for you can see here, it really is irrelevant. It's just if you have losses for, say, a 6-month period, that's fine. You can carry all of it back against the last 12 months. This is the good thing. It doesn't really matter. This is totally irrelevant. The length of time of a particular period we're dealing with. It's the carry back that we have issues with. We're not restricted based because we have a 6-month period of loss in our year. No. What we're restricted with is what we can carry. What we are allowed is, if you like, is what we can carry back. So we can carry back in the normal way. Right. Sorry, I just wanted to see how much time I had left so that I didn't. Oh, I'll do this anyway, and then we'll end that. So the next thing I want to talk about is this question of terminal loss relief, which is actually very, again, like I say, very much more straightforward as opposed to when we're dealing with the individual. If you remember when doing the individual, terminal loss relief, it's just convoluted, if you like. Even the layout was slightly convoluted, and we could only use it against trading losses. Sorry, trading profits of the last 3 years. But here we can use it against total profits. That's the first thing, on a last in, first out basis. So what am I saying? So let's come to this example straight away. And I'm just going to do this live on here. What are we saying here? This company has come to an end. We have the 95,000 loss. Well, of course, I'm going to use it. You carry it back 3 years. 1, 2, 3 against total profits. Potential, of course, to lose QCDs at that risk. So first of all, I will use it in my year. That's a general rule anyway. Before you can carry back, you have to use in your year. So this loss will wipe out this 8,000. So I will first of all, if you like, year end. I'm just going to write 18. You know it's the 31st just because of time. So you have the 8,000, and that wipes that out. Then I will go into the year end 18. I will have 26,000, 7,000. Wipe that out as well. That's 33. Then you have here year end. Oops, sorry, this would be 17. 16. Then I have 30,000 here. I have 3,500. So that's 33,500. Wipe that out. 33,500. And whatever's left, year end 15. 35,000, 5,000, 2,000, 2,500, whatever's left. So I've had 95, take out 8, take out 33, take out 33,500, and whatever's left from here, whatever the balance is, whack against this. And then, of course, it'll probably be much less than this, and then take off. So here are wasted QCDs. QCD's gone. You can't use them. QCD's gone here. QCD's gone here as well. But here, I'm sure you can still use the QCDs. So what I'll do is I'll just go straight to the answer, example 4, and we'll just see with the actual thing, you can see what I've talked about. That's the 8, that's the 33, that's the 33,500, and we can see that we had the balance of 20,500 whack there. That comes in, whack its QCD off, and you have your 19 grand available to use. Cool. And that, if you like, is how we deal with terminal loss relief. So in the final video, what we'll do is we'll look at how we deal with some property losses and how we deal with capital losses as well. Cool.